Good afternoon. Welcome to daily currency update from the currency desk. Yesterday we had largely sideways trading in the dollar against the Indian rupee pair. So largely we did not witness any major appreciation in the Indian rupee. But yesterday after our market session we had the FOMC meet in which the Federal Reserve has announced its plans, that is, it is going to keep near zero interest rates, which has been extended by a year up till mid 2015, wherein it would review the low interest rates again based on the market scenario and again decide if it would keep the interest rate at lower levels or raise it. Also, US Federal Reserve has announced 40 billion mortgage-based security buyout, MBS buyout program, when it would be buying $40 billion worth of MBS every month. So in short, the quantitative easing 3, which has been much touted and much been talked about, has finally been undertaken by the Federal Reserve. But then again, it has been not undertaken in a full-fledged manner. So right now it is only done not unlimited buyback, so it's only limited to $40 billion a month. Again, what is the key here is Fed has clearly indicated that if the market situation worsens or if the US macroeconomic data is not up to the mark, mainly jobless data, so it would again bring in an increase in the size of its quantitative easing, that is a buyback program. Again, in the Indian terms, we had the diesel price hike, which is 5 rupees hike per litre, out of which 1.5 rupees hike is due to the excise duty increase. This is the first time there has been such a major hike in the diesel price, so it was a huge positive to reduce the under recoveries in the oil marketing companies, or in short, the government deficit would also reduce due to this. So these two news combined have been a major positive for the Indian rupee, and we have witnessed around 2% appreciation in the Indian rupee today. We witnessed the Indian rupee open at around 55 levels, and from there in it has come down till 54.50 in the spot. Also, what is worth noting here that the bond markets have not reacted much positively based on the US Federal Reserve quantitative easing announcement, and the 10-year yields have surged above surged around 6 basis points of the US. So as expected, we also witnessed a major upside movement in the euro against the USD, crossing above 1.30 levels, but then again if it would sustain above those levels or not is doubtful currently. Also, we have the US Michigan Confidence Index, which would provide a trigger for the USD INR pair, as well as the USD against the JPY pair, that is Japanese yen. In terms of pound, there is no macroeconomic data, and we would largely see the movement in pound tracking the movement of the euro against the dollar and against the Indian rupee as well. So currently we have a bearish trend in all the currencies developing technically. So in terms of pound, currently the second support level is 88.17. If there is a crossover across under that, then the trend would become largely very bearish, and one can initiate a short position with a stop loss of 87.70 in that. Again, in terms of dollar, the crucial support is at 54.17 levels. If there is a cross under that, then it could be a major bearish trend developing for the US dollar against the Indian rupee. The macroeconomic, what would be a key indicator in the next 2 to 3 months is the macroeconomic data from US and other countries, because based on the macroeconomic data, the US Federal Reserve would take its decision on the quantitative easing. So in the next 2-3 months we would see very rational movement in terms of the impact of the macroeconomic data, and largely all the currencies would move in a range based on the macroeconomic data outcome. In terms of yen, we have witnessed a major appreciation. It's already trading near lifetime highs, that is around 77.70 against the US dollar. So right now it's a major negative for the Japanese economy, which is majorly a export based country, and right now the domestic demand is also not much of a positive. So it could be a major problem for the Japanese economy. Currently we have the Japanese trade balance data also. So even if the trade balance data is impacted by the increase in the yen, appreciation in the Japanese yen's value against the US dollar, its exports would be impacted to a great extent. So again, all this needs to be seen in the next 1 or 2 months, and on that basis we would witness a movement in the Japanese yen against the US dollar and against the Indian rupee as well. The trend for Japanese yen is also bearish currently. If there is a cross under of if there is a cross under below 68.60, one can initiate a fresh short with a stop loss of 70.09 in the spot levels. So all in all, the macroeconomic data would play a key role. Also, we have the government decision on FDI in retail. So all these meetings and also data would be kept in keen eye on by the investors. Also, we had the inflation data which came in slightly above expectations. That is the wholesale price index data. So, but there was not much negative impact of that data. So all in all, one can see that the investors are reading much positively into what the diesel price hike, and all in all the government deficit is expected to reduce or become slightly positive due to the measures undertaken. So all in all, we can see a positive trend for the Indian rupee developing from here on. But yes, again 54.17 seems to be a crucial level. So until there is a cross under that, one would not initiate any fresh short in the USD against the Indian rupee pair. Thank you.